All right, how you doing, everybody? Jim Gaffney over here at AmeriFirst Home Loans. Just wanted to try to make an attempt here to do some screen sharing and talk a little bit about the term reduction loan. I've done a couple of videos about this. I've done a few coaching classes regarding a term reduction, but I just wanted to bring to light something that's really important, especially for those people who do think that they're going to move, right? And by the way, right now is a great time to engage in home financing, whether it's for a refinance, a debt consolidation refinance, or purchasing a home. This is a great time right now. Interest rates are really still at historic lows amidst all the things that are going on right now with employment, or I should say unemployment, essential jobs, non-essential jobs, all the confusion that's taking place in the country now. The one thing that's actually really stable is home interest rates, home loan interest rates. So hear me out. If you have a 30-year mortgage and you're within, let's say, I don't know, 2 to maybe 7 years into that 30-year mortgage, I just want to provide a quick example. I'm going to share my screen with you for a second here. So if you can see this example here, I'm just at a regular mortgage calculator online. So I hope everybody can see this right here. So if you had a $350,000 mortgage that you've been into for, let's say 2 years, just as an example. So you took out a mortgage 2 years ago for $350,000. Your balance today should be somewhere in the range of 335, maybe 337-ish. In this example, we're going to say you started a mortgage with $350,000. You were on a 30-year term, and your interest rate was 4 1/8%, which is about the going rate at that time. Okay, so I click on calculate. Oh, that's 35,000, not 350. So welcome to live TV, guys. Okay, so principal and interest payment right here, $1,696. You see that? Now look at the distributions between your principal and interest. You're looking at $493 a month going towards principal, and you're looking at interest of $1,203. What I want to do is kind of fast forward in that example. Let's go fast forward 1 year, 2 year, 3 year, 4 year, 5 years, and your balance is $319,000. If I fast forward now 6, 7, 8, 9, 10 years, and your balance is $279,000. Okay, so stay with me. So that loan, right? That loan today on a 20-year term, you're going to be about 336-ish as a balance. If you're 2 years into that 30-year mortgage, okay, on a 20-year term, let's just say 3% is a pretty fair guideline rate as far as what's available today for 20-year terms. Take a look at this. Your payment's $1,863, so that's a $160 per month increase from what you're paying right now. Okay, so hold on to that number for a second. So your payment's going up $163 a month. Now, look at this. Look at the principal. Boom. $1,023. We were just at $493. So for $160 a month difference, your principal reduction has just gone from $493 to $1,023. So pretty substantial. Take a look at the 5-year and 10-year outlook for that. Actually, we could look at 3 years because that would equal where we were at 5 years into your house. So $300,000 right here, $300,000 would be a new balance. After 3 years, after 5 years, 273, 6 years, 7 years, 8 years, 9 years. 9 years, you're at 213,000. 10 years, you're at $197,000. So, to compare that to the path that you're on right now, that's, almost an $80,000 difference between those two. So shaving 8 years off the life of that loan for $160 difference in your monthly payment, that's, you talk about removing 96 months off the life of your loan, which is a lot. excuse me, you're talking about 8 years off the life of your loan for a very small monthly investment, and taking advantage of that rate reduction. So in that example, that $350,000 example, that's going to net about $124,000 off the life of the loan in unpaid interest. So I just wanted to use this to illustrate that. So if all those people out there are like, well, we might be moving in 3 years, we might be moving in 5 years, might be moving in 8 years. You know what? Even better, because when you do that, right, and you know, when you move, and you sell your home, your proceeds check from your sale, right? Just when I was scrolling through these different balances, you know, you sell that home after year, I don't know, year 10, for example, you're making an extra $70,000 off the sale of your home for a really small payment monthly. So imagine that you go to sell your house in 5 or 6 years, and you're walking away with an extra $30, $40, $50,000 check that can help apply towards your down payment on your next home, right? All at a very small cost. It's just a matter of taking action and getting informed with your local lender, or certainly feel free to call myself, to call me. I will take a look. I'll print up an amortization table, let you know what your individual scenario looks like. No two loan scenarios are the same, but so there's a lot of opportunity right now to make a good fiscal decision for your family. It might allow you to retire earlier, have college paid for, you know, at the time that your children are ready for college, without having any mortgage debt. So these are, you know, 6, 7, 8 years off your mortgage is a substantial amount of money. And it's also a substantial amount of time that you can potentially live debt free, when you get there. So maybe less exciting now, but fast forward 20 years, and I'm sure you would look back and say, wow, that was a pretty good idea, because now I'm mortgage free a lot earlier than I originally planned. So thanks for tuning in. Hope the illustration helped a little bit. You can Google mortgage calculators, mess around with it on your own. You know, you can click mortgage calculator, mortgage amortization calculator. You'll see all different types of calculators that allow you to put in your balance with the new proposed interest rate for a 20-year term, which is 240 months, and 3% is a pretty good guideline rate to use today for that 20-year program with most lenders. So give me a call if I can help, guys, and we'll talk to you soon. Take care.